What if buying investment property didn't just build long-term wealth, but also cut your tax bill immediately? Because in 2025, a major tax change quietly made real estate investing more powerful, and most investors still haven't connected the dots. Hi, it's Christopher and Broox Mahr with MMG Real Estate Advisors, your local Orange County realtors, breaking down the tax strategy that has supercharged investor returns. Thanks to the One Big Beautiful Bill Act of 2025, 100% bonus depreciation is back permanently. And for real estate investors, this means now you can unlock massive first-year tax deductions simply by buying or improving investment property. Let's take a look at what this means and why it changes the math on buying real estate. The problem with normal depreciation: under normal rules, real estate depreciation is slow. Residential rental units are written off over 27.5 years. Commercial buildings, 39 years. That means the tax benefits are spread thin, even though your cash investment happens up front. But bonus depreciation changes when you can take those deductions. What 100% bonus depreciation does. With 100% bonus depreciation reinstated, certain parts of a building can now be deducted in year one, instead of waiting years or decades. We're talking about flooring, cabinetry, fixtures, electrical, and plumbing servicing specific areas, certain HVAC components, parking, lighting, walkways, and site improvements. This is typically unlocked through a cost segregation study, which reclassifies parts of the property into shorter life assets. And now those components can be expensed immediately. Why this makes buying real estate more attractive? Here's the key shift. Buying real estate isn't just a long-term appreciation play anymore. It's a short-term tax strategy. By accelerating depreciation into year one, you reduce taxable income right away. You keep more cash instead of sending it to the IRS. You improve your after-tax returns without changing operations. It's one of the few investments where buying an asset can actually lower your taxes immediately. Real-world example. Let's say an investor buys a $4 million apartment building. After a cost segregation study, $900,000 is identified as short life components. With 100% bonus depreciation restored, that entire $900,000 can be deducted in the first year. That single purchase can generate a tax deduction large enough to offset rental income, other real estate income, or in the right structure, additional qualifying income, all while the property produces cash flow. Value add and renovations. This is especially powerful for value add investors. Interior renovations like lighting upgrades, electrical work, and interior finishes often qualify as qualified improvement property. Now you see, under current rules, those improvements can now be fully expensed immediately, instead of depreciated over many years. So improving a building doesn't just increase the value, it can also create an instant tax write-off. Why timing matters? Because this version of bonus depreciation is permanent. Investors finally have planning certainty. You're no longer racing against a phase-out schedule. You can underwrite deals knowing the tax benefits are there today and going forward. That stability alone makes real estate acquisition easier to model and justify. A few important disclaimers: land doesn't depreciate. State tax rules may differ. Passive activity rules still apply. And proper structuring and documentation matter. This is where working with the right tax professional becomes critical. The One Big Beautiful Bill Act of 2025, it didn't just bring back bonus depreciation. It made buying investment property more powerful than it's been in years. If you're already investing in real estate, this supercharges your returns. And if you're on the sidelines, this tax shift might be the reason the numbers finally make sense. If you want to see how this applies to your next deal or how investors are using this to scale faster, make sure to subscribe and we'll break it down in future videos. Or reach out using the contact information in the description below. We're here to guide you with knowledge and facts, not fear. Thanks for watching, and we'll see you in the next video.